please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, back home yesterday on Dalal Street, we witnessed quite a lot of volatility. So the Nifty eventually pretty much closed flat while the Sensex ended below that 34,300 mark. We saw mid-caps seeing selling pressure post-lunch, so that index also breached the 20,000 mark and underperformed with a weak advance decline ratio. The Bank Nifty was in focus on account of the news with regards to PNB, but we had other stocks such as ICICI Bank and SBI which really held up. But Nigel put it all together for us end of the week.
Yeah, that's right, Ekta. You know, the markets really this week, the global markets, they've been so buoyant. And for us, this entire Nirav Modi PNB controversy, that's what's really putting a spanner in the works, really. Because the global markets, they have done very, very well. You take a look at some of those developed markets. The Dow, for example, that's up more than 5.5%. The Russian and the Brazilian index as well. So the mother market's doing very, very well. And in fact, these emerging markets as well, they're giving you big, big returns. So the Dow, the S&P 500 and the Nasdaq, they're up between 5 to around 7%. And the emerging markets have done well. And the Indian markets, well, we're sulking actually. Yes, we had a truncated week. So the Nifty is up only around 0.5% or thereabouts. You have the Nifty Bank that's been a relative underperformer because the PSU banking index, that's got smacked in the face. Remember, SBI is down close to around 5% in this week. And the breadth of the markets as well have taken a bit of a hit. Now, we're lucky actually to be trading with some gains because a couple of heavyweight stocks, Reliance Industries and HDFC, both of them are between 3 to around 4%. And that's what's really helped the Nifty to even eke out some kind of gains in this week because there are big, big losers. You know, take a look at PNB, some of those PSU banking stocks, SBI, for example, as I pointed out earlier, all of them have taken a bit of a knock. The FIs, what are they doing? Well, they have been selling into this market. The last 8 sessions, they have been sellers. So that's something you should note. They have sold close to around 10,000 crores. So keep that in mind. But we're looking for positives, right? It's a Friday morning. Well, the last sell number, that's yesterday's sell number, that's the smallest that we have seen in the last 8 trading sessions. So yesterday, the FIs, they sold roughly around 240 crores or thereabouts. The DIs, well, they have been chipping in. So you should keep that in mind. And I'll look at this sell number reducing gradually as a positive. And I'll look at the FI data even in the derivatives market. And that as well is encouraging. Why? They're unwinding some of those short contracts. Remember, staying short in this market hasn't made you any money in the last many, many months. So they've unwound some short contracts. Some of those put long positions that they bought, they unwound even those. And in fact, if you take a look at the call shorts, you know, call shorts is something that was telling you that, yes, there is a bit of a hurdle when you're going up. They covered some of those short call contracts as well. So I'll keep that in mind. I'll say that the FI data from yesterday was more encouraging than what we have seen in the last few days, both in the cash market as well as in the derivative market. Technical levels you're looking out for. Well, the 50 DMA, that should be a bit of a resistance on the upside, 10,600 approximately. But on the downside, at around that 100 DMA, that's where in fact you should see good buying if we get to them. The 200 DMA, thank God we've not yet really tested that spot. Well, what are we looking at in today's trading session? The Enforcement Directorate, well, they're saying that in fact they've raided various premises of Nirav Modi and they have got nearly around 5,100 crores. So that's more than 40% of, you know, what this total scam is. We'll have to keep an eye on PNB. Let's see how it's reacting on that front. Though in fact, the trade deficit number, Ekta, that came late last evening, that's a bit of a dampener. I think more than a 50-month high. So the economic data not looking too good as well. So just keep both those factors in mind.
Yes, on the fringe, this $16 billion is probably not going to go down well with the street. But Nigel, stocks in focus?
Oh, PNB. We'll keep an eye out on PNB. You know, we'll see what are the developments there, what's happening in terms of rates, what is the money that can be recovered. So we'll keep an eye out on that one. Even the other PSU banking stocks, we'll have to keep an eye out on there because now that number is really moving around. Some say that in fact the number is larger than 11,000 crores. How much larger? How big is this mess? We'll keep an eye out on PNB and PSU banks. Then we'll be focusing on Fortis. Remember, late in yesterday's trading session at around 325, 320 approximately, they have said that in fact the Supreme Court, they've lifted the stay in terms of some of those encumbered shares that were owned by the Singh brothers. That's what gave the stock a big spike up intraday. You just pull up, you know, the last hour, it's ended at around 143 approximately. But I think there was a big movement. It was close to around 5-6 rupee movement in terms of Fortis. So we'll keep an eye on that. Let's see how that reacts. Was the street reacting too soon? That's the chart we're talking about. Yes Bank, they're going to be considering a proposal to raise some funds via debt securities as well as on a placement basis. So we'll keep an eye on that one. And a couple of other stocks, Lumax Industries, the stock has done very, very well. In the month of February itself, the promoter has gone and bought more than 0.5% from the open market. So keep an eye out on that front. And Praxis Home Retail, that's another company that I'm looking at. It's seen a sharp correction from the top, but Adi Financial Advisors LLP, they have bought roughly around 6 lakh shares in yesterday's trading session. So keep an eye out on that one as well, Ekta.
Okay, all right. Lot of stocks to talk about and focus on in today's trading session.
Now, India's trade deficit has weakened to a 4-year high for the month of January. The deficit crossed $16 billion despite a 9% jump that we saw in exports. Lata Venkatesh joins in with more details. Lata, over to you.
Well, this is the highest trade deficit in 56 months, which means this is the highest trade deficit akin to the deficit we had before the taper tantrum, and which actually made us one of the fragile 5. Look at the numbers: imports up 26% and exports are up only 9%. We are not able to take advantage of the global growth. And, in some sectors, exports not picking up will hurt in sectors like ready-made garments, where exports are contracting for the 5th or the 6th consecutive month, and even jewelry, where it has remained flat or falling. Both these are labor-intensive sectors, so this is hurting. But deficit is more due to the higher crude oil prices, which is why imports are up 26%. And therefore, chances are that deficit will fall in February because crude prices, at least for the moment, have peaked off. So, fortunately, our problems will be smaller. The other important point is that this higher trade deficit is coming at a time when globally the dollar is very weak. We are the worst performing, one of the worst performing EM currencies in 2018, but it's not hurting much or showing up as a problem because dollar is so weak. And probably by the time things change, our deficit may improve, especially after April, because the import duties kick in. Now, import duties have been raised on at least 23% of India's imports. So definitely that will have some impact and bring down imports. And maybe before things get too out of hand, our deficit will be under control.
Okay, all right, Lata, thanks very much for that. Well, staying with the macros, bond yields have surged to 7.6% in yesterday's session on the back of rise in crude prices globally and the surge in US Treasury yields as well. At its worst, the one-year Indian GSEC, or the government security, fell almost a rupee, while its yields rose from 7.49% overnight to 7.6%. However, an RBI release saying the central bank will provide additional liquidity if needed during March cooled yields and bonds, and they climbed back by around 15 to 20 paise. RBI said that while its policy is to move to neutral liquidity, it will nevertheless inject adequate additional liquidity using a combination of appropriate instruments while continuing with its normal liquidity adjustment facility operations.
All right, CNBC TV18 has been getting you the latest updates from the big fraud at PNB. MD and CEO Sunil Mehta has given an assurance that the bank will honor its bona fide commitments. Moreover, PNB has also confirmed our big news break that Nirav Modi had indeed written to the bank outlining a repayment plan. Ritu Singh is here with all those latest developments. Ritu, over to you.
As soon as the 11,300 odd crore rupee scam was disclosed by Punjab National Bank to the exchanges yesterday, the question was, which are the banks, that get impacted by this? Now, of course, Punjab National Bank is the one that has to repay all of these dues, given that PNB itself was the guarantor, but the 6 banks involved in this case that had lent credit to Nirav Modi and Gitanjali Gem companies on the basis of this guarantee extended by Punjab National Bank are the following. Allahabad Bank about 2,000 to 2,200 crore rupees, Axis Bank about 2,000 crore rupees, but then all of that exposure towards Punjab National Bank, that is, was subsequently sold off, and now Axis Bank, it also clarified to the exchanges, has no more exposure. The State Bank of India about 960 crore rupees, Union Bank 2,300 crore rupees, and then Bank of India and Canara Bank with anywhere between 1,000 to 1,500 crore rupees of exposure towards these LOUs, against these LOUs where they issued buyer's credit to Nirav Modi and Gitanjali Gems companies. So this is in total what the exposure is. But of course, all of these claims have to be met by PNB, given that PNB was the guarantor, and the pressure is really mounting on PNB, even as it tries to say that the blame is partially also on the Indian banks that failed to notify PNB or give it or share any information relating to the documents shared by these companies at the time that it was extending credit.
Okay, all right, Ritu, thanks very much for that. Well, we've also been speaking to several prominent voices from the world of banking and finance. So let's hear out what the Dean of New York University's Stern School of Business, Mr. Rangarajan Sundaram, had to say on this scam.
It startled me when I saw this, but did it surprise? No, we've seen similar things occur in allegedly sophisticated financial institutions worldwide. You remember the SocGen case when Jerome Kerviel lost 5 billion euros, what was then $7 billion. He was not even supposed to be trading. Now, how does a non-trader trade $7 billion worth? His notional positions were $50 billion, and SocGen systems could not track it. We've seen this happen repeatedly, time and again. I think this is a global problem, and yes, what happened at PNB was awful, but I think we should be careful not to make too much of it. I mean, I think all banks need much better risk management systems than they have in place today.